seems all eyes with this kind of a move with the Fed keeping the interest rate unchanged was pretty much unexpected lines. But in terms of their commentary, they said that they expect further gradual increases in the overnight rate. They've not mentioned what that the volatility has hit the markets recently. No comment on that. Do you think that these moves that we're going to see from the Fed now are going to be fairly gradual and, won't really invert the yield curve in a hurry?
No, I don't think they will invert the yield curve in a hurry, and they're going to continue to be gradual, of course, which is what they've been throughout this cycle, which has gone on now for a couple of years. I think the markets were probably a little bit disappointed that the Fed didn't make a comment about the potential impact of the volatility of the markets on their decision-making. But we shouldn't be surprised about that because the Fed will only take into account market volatility in their decision-making if it impacts the U.S. economy. And although the U.S. economy is certainly slowing at the margin, as everybody knows, it's been very strong. And I think the Fed is just giving a clear signal here that as long as the economy continues to grow at a decent pace, they have got some more tightening to do. And I think that's the takeaway here from today's meeting. We're almost certainly going to get a rate hike in December, and I'm sure we're going to get a couple of rate hikes next year. But of course, that will depend long-term on how the U.S. economy plays out.
Mr. Dennis, should one view emerging markets rather positively? Because emerging markets have seen a massive exodus. And when I say exodus of flow, do you think if one has to really weigh developed markets versus emerging markets have a far greater and a better proposition, both in terms of growth and valuations?
I do think that's the case, certainly in the very short term. I posted something the other day which argued that we're heading into typically a very favorable time of the year for emerging markets, the so-called year-end rally. And I think we got ourselves very, very oversold in October. Now, whether you can make a call here on EM versus DM over the very long term, I think is harder. But I think the key in the short term for emerging markets is going to be, do you see some further losses for the U.S. dollar, which I think is probably going to happen. My sense here is that the U.S. economy is not going to continue to grow at the 4% rate in Q2, the 3.5% rate in Q3. And as that slowdown into next year develops, I think people will start to doubt how much more Fed tightening there will be. The dollar will come under a little bit of downward pressure. It looks very overvalued as far as I'm concerned. And that's the sort of thing that's going to pull money back into the emerging market. So I do think the outlook looks pretty good at this point over the next 3 to 4 months or so. I think the longer term is always still very hard because, of course, the U.S. is a very attractive long-term place to invest and always has been.
And, what's the sense that you're getting with now the government set up? Do you think that by and large the expectation on Wall Street is that the kind of business-friendly policies that we've seen from President Donald Trump, that is going to continue while maybe some of the more disruptive market actions will be in check?
I think the latter comment there is a harder call to make. The best bet is that the Democrats are going to make something of the fact that they do have a majority in the House. There is going to be some investigations of various aspects of the President Trump presidency. But I think the fact that you're going to get gridlock because the Senate's obviously Republicans in the majority, House and the Democrats in the majority, you're not going to see much in the way of new significant legislation over the next 2 years, which is going to pull back the fiscal expansion that you've seen from the U.S. over the last year or so. So the fiscal expansion is there. It is going to provide some support. But I think the market, with the economy doing quite well, and I think earnings growth still being quite good, if not as good as it's been the last couple of quarters, the market's going to quite like gridlock, I think, because it's going to mean these supports for the U.S. economy are going to continue.